Hello, everyone. Our topic that we will be discussing now is all about the characteristics of VAT or value added tax. But before that, let me first give a short and simple background information about value added tax. So, what is VAT? As of right now, we all know that VAT stands for value added tax. The tax in VAT is obviously the country paid to the government. The value added signifies the entities like the manufacturer, the retailer, who add value in the supply chain. And for everyone's information, according to the Organization for Economic Cooperation and Development, or OECD, more than 160 countries use a VAT system. So basically, we'll keep that in mind if in the near future we'll be having business to them. So generally, value added tax is a form of sales tax. It is a tax on consumption levied on the sale, barter, exchange, or lease of goods, properties, and services in the Philippines, and an importation of goods into the Philippines. It is an indirect tax which may be shifted or passed onto the buyer, transferee, or leasee of goods, properties, or services. Thus, VAT is added to a product at every point of the supply chain where value added to it.
So, as we all know, business tax have three different types, and VAT is one of it. Each type of different identification before a certain operation to be considered covered to such type of tax. With that, we'll now focus on the characteristics of VAT or value-added tax. First, it is an indirect tax where tax shifting is always presumed. So the amount of VAT may be passed on to the buyer, transferee, or lessee of the goods, properties, or services. Meaning, the VAT will be transmitted because the amount of value-added tax may be passed on to the buyer. Since the seller will be the medium collecting agent of the BIR, remember that taxes are being remitted to the BIR because it is our agency of the government that in charge to tax-related matter, so the seller is the one statutorily liable to pay for the payment. Seller is the one statutorily liable to pay for the payment of the tax, but the amount of the tax may be shifted or passed on the buyer, transferee, or lessee of the goods, properties, or services. Like for example, na ako'y gipalit or para lang kanang gibaligya. Then ako ang price is 100, ang price akong gibaligya is 100. So required na ko siya nga patungan siya og 12% na VAT. So instead of 100 nga yung bayad sa kuha is 112 since it is included to the 12% VAT that I am collecting to my customer. And later on, I will be remitted to the BIR. That is why it is liable for the payment of tax. If I will be the seller, I am liable enough to pay to the BIR for VAT that I have collected. But I am not technically the one who will pay the burden since the characteristics of VAT can be passed on to the buyers, the one who carrying the burden. My rule only is to collect the payment for BIR. So technically, it will not come from going out the money. So the burden of paying is not really on the seller but on the buyer or on the end user. That is why it is indirect tax. Because if we are the seller, it will pass to us. That is why there is a tax shifting. In the case of importation, the importer is the one liable for the VAT. Burden of the tax is borne of the final consumers, although the producers and suppliers are the ones who have to file their VAT returns to the BIR. Hence, what is transferred or shifted is not the liability to pay the tax, but the tax burden. So in the case importation rather, the importer is the one who is liable for the VAT. Therefore, what is transferred or shifted is not the liability to pay the tax, but the tax burden.
So let's go on for the VAT characteristics number 2. So base, because according to the definition of VAT, VAT is the tax and consumption levied on the sale, barter, exchange or lease of goods or properties and services in the Philippines and on importation of goods into the Philippines. So end users of consumers' goods or services, they ultimately shoulder the tax as a liability, therefrom is passed onto the end users by the products of these goods or services. So it is consumed. So when it talks about consumption based, the VAT is included. And then you passed it because in characteristic number 1, it can be passed, it can be shifted because of consumption. It is consumed by others. So VAT forms a substantial portion of consumer expenditure. For example, from manufacturers to the wholesalers, from wholesalers to retailers, from retailers to sari-sari store to end users. So from manufacturer or producer, the selling price of the product is 100 pesos. So kay naman tay VAT nga 12%, which is included when it comes in price, so the price will become 122. And then when the wholesalers purchases the product from the manufacturer, it will become 112. And if the wholesaler sells the product to the retailers, or the retailers purchase the product, so ang retailers pwede na sa nga patungan or padak-an ang iyang price and include na diri ang VAT. As the selling price of the product will increase, magkadako sa iyang VAT until maabot sa end users. Pag abot sa end users, dako na ang mabayad na tax because the final burden is in the final users. It goes on and on because of the consumption and consumer base.
Next characteristics, it is imposed a value added in each stage of production and distribution process. VAT system assures fiscal advocacy through collection of taxes on every level of consumption. Back to income tax subjects, we have something we call fiscal advocacy. So if there's a fiscal advocacy, there's a lifeblood theory. It cannot survive the business in a certain organization if they have not enough money or investment for their project to sustain their job and to protect the society through infrastructure and many more services to the government. Each businesses in the supply chain takes part in process of controlling and collecting the tax. Example, tobacco manufacturing is a manufacturer of bombastic tobacco sells its product to Noiti distributor in the Philippines. So the highest is the tobacco manufacturer because he or she made the product or the tobacco and exclusively distributor to Noiti. Exclusively distributor, the one who took the product manufactured by tobacco to be distributed to the other establishment. Noiti sells the same of the following: ABC Company, exclusively distributor for Luzon; BEF Incorporated, exclusively distributor for Visayas; XYZ Company, exclusively distributor for Mindanao. So every company has there are distributor, Luzon, Visayas, Mindanao. It is not directly received to the tobacco, but it will pass to Noiti. ABC sells the product to various customers such as 724 supermarket. To analyze the problem more, VAT is imposed as follows. Tobacco is subject to VAT on its sale to NEPI. In addition to VAT, tobacco is also subject to excise tax because excise tax are those production, sales, or consumption of commodity in a country. NOIPI will charge VAT on its sales to ABC, DF, and XYZ. When NOIPI sold it to ABC, DF, and XYZ, it will impose to VAT. The value-added tax which NOIPI imposed there is what we call output VAT. When he or she buys, that is called input VAT. When he or she sold it, that is called output VAT. ABC will charge VAT to the customers such as 724. 724 will charge VAT to its customers or end user. So as we notice the problem, there is a chain. Therefore, the supply chains happen and also it imposed to value-added tax.
So the number 4 characteristics states that it is a credit in invoice method value added tax. So what does that mean? So there is what we call VAT payable, and that VAT payable is simply the difference between the output VAT and the input VAT. When the output VAT is greater than the input VAT, we will have that VAT payable. So as stated here, VAT payable is the amount remitted by taxpayer to the BIR. So this is the costs, the net amount that is paid by the taxpayer to the BIR. So say for example, nagbenta ako and I imposed a 12% VAT. So if that will reach to 10,000 rather, that will be my output VAT. When nagpa-purchase ako, and as I purchase, there's that VAT on it already. So that VAT purchase price is the input VAT. And as if it is 8,000, so the result will be 2,000. So my VAT payable is 2,000. And that's the only price I will be paying to the BIR, not the whole output VAT, since I have the input VAT. So now we have here the seller of goods or services passed on to the end user the liability to pay the tax, who in turn may credit their VAT liability from the VAT payments they received from the final consumer. So actually, input VAT is what we consider as asset, while the output VAT is considered the liability. So, di ba, when we say liability, it means we have that obligation, while asset, we have that resources. So, what is that resources? So, because in a form of a receivable, we're paying, and of course, naglapas tayo ng pera, and that money is the resources because that's the thing we own, so that we may credit that amount from our VAT liability. So we can apply our input VAT to our output VAT, so that is why we offset input VAT to our output VAT. So this is because VAT is a consumption of tax levied on sales to be borne by consumers, with sellers acting simple as tax collectors. So now, when we talk about credit invoice method value added tax, this adapted in the Philippines in computing the VAT payable. So VAT is imposed on the sale first, called output VAT, and a tax credit is allowed or claimed on the VAT passed on to his purchase or cost of goods or services, known as input VAT. So this is what I am saying a while ago, that this is credited to our VAT liability. But to have a more clear understanding about the whole explanation I've uttered, we have here an example. So this stated that on January 10, 2021, Alpha Corporation sold product X to Delta Incorporated for 1 million plus 12% VAT. On January 15, 2021, Delta sold the product to Omega for 1.2 million plus VAT of 144,000. So the question here is, how much is the VAT payable to Delta? So now in this problem, we have to be careful because it composed of more than 2 corporations, the Alpha, the Omega, and the Delta. But the question points out the Delta. What is the VAT payable of Delta? So for us to identify the VAT payable, we have to consider what is the output VAT, what is the input VAT, and let us get the difference of the two. So be reminded that when we say output VAT, we're talking about the sales. If we say the input VAT, we are talking about the purchases. So here, for the output VAT, Delta sold the product X to Omega Corporation for 1,200 million plus a VAT of 144,000. So if we will multiply 1,200,000 to 12%, we will get that 144,000. And that will be the output VAT. So now the input VAT is the purchases. And here it says Alpha Corporation sold product X to Delta Corporation for 1 million plus 12% VAT. So Delta is the purchaser or the buyer. So 1 million multiplied by 12% is the 120,000. So here's the solution. So now, as you remember that VAT payable is a difference between the output VAT and the input VAT. So 144,000 minus the 120,000 is 24,000. So aside from paying the whole 144,000, 24,000 na lang because technically we have 120,000 na binayaran in relation with the VAT. So here, output VAT due on the sale, lease, or exchange of taxable goods or properties or services by any person registered or required to register under Section 236 of the tax code. Then input tax due on or paid by a VAT registered on importation of goods or local purchase of goods, properties, or services, including lease or use of property in the course of his trade or businesses. So that is just what I explained a while ago, that output tax is on the sale while input tax is on the purchaser or the buyer or purchases, I mean. So next, Section 4, amended by RR2 2007, simply states that if the input tax is greater than the output tax, then it will be carried over to the succeeding quarter later on. Again, VAT payable is where output tax is greater than input tax. But when input tax is greater than the output tax, then it will not be considered payable na. Nasa asset na ang ating excess, and that will be carried on to the succeeding quarters. So the next point, is zero rated sales by a VAT registered person. It means that there are particular sales that is zero rated. For a 12% VAT that we have here in the Philippines will turn out 0% due to its zero rated sales, and that will result to the absence of output VAT. So I guess that's all. We hope we were able to unlock all your curiosities or questions about this topic. But if there are some points of the topic that we weren't able to explain further, just drop your questions below. So I guess this is group number 5, the reporter for today. saying thank you and take care.